Donald Trump is back in the headlines, this time not just in politics but at the center of a crypto controversy involving billion-dollar deals, ethical questions, and growing scrutiny that could affect investor confidence globally. Bitcoin and other cryptocurrencies are already highly volatile, but Trump-linked ventures like World Liberty Financial have added political drama that investors and regulators cannot ignore. Billionaire hedge fund manager Ken Griffin, a prominent Republican donor, publicly criticized the Trump White House for allegedly enriching itself through crypto-linked deals, warning that such transactions risk undermining public trust, even though he has supported some Trump policies in the past. Just days before Donald Trump's second inauguration, World Liberty Financial sold 49% of its company, valued at roughly $500 million, to investors tied to Sheikh Tamim bin Zayed Al Nahyan of the UAE. Critics immediately raised ethical and national security concerns, arguing that the timing could represent a conflict of interest or even violate constitutional provisions meant to prevent foreign influence over U.S. political processes. Representative Ro Khanna launched a congressional investigation demanding transparency and documents to determine whether private financial interests may have influenced public policy decisions. Analysts warn that this deal could set a precedent for assessing politically exposed transactions in cryptocurrency, making investor confidence a complex function of both market fundamentals and governance perception. Adding another layer to the controversy, President Trump issued a pardon to Changpeng Zhao, founder of Binance, who had pleaded guilty to anti-money laundering violations. Ethics experts and opposition figures questioned the timing of the pardon and potential conflicts with Trump's own crypto holdings, suggesting that it could be perceived as prioritizing personal financial interests over public accountability. Analysts note that combining executive pardons with high-stakes investments generates uncertainty, making it difficult for domestic and international investors to accurately assess risks associated with crypto assets connected to politically exposed persons. Globally, regulators are increasingly focused on compliance and enforcement. In Australia, authorities fined unlicensed crypto firms like BPS Financial millions of dollars and imposed long-term operational bans, signaling that transparency and adherence to regulation are non-negotiable. The BPS Financial case shows that jurisdictions worldwide are unwilling to tolerate opaque or misleading financial operations, reinforcing the need for firms to adopt robust governance and reporting mechanisms. For U.S.-based ventures like World Liberty Financial, international attention amplifies the consequences of domestic controversies, affecting valuations, partnerships, and public perception. Meanwhile, scams and fraudulent activity remain a persistent threat. Cryptocurrency continues to attract illicit actors, and high-profile politically connected deals, even when legal, can influence market perception and investor sentiment. Smaller investors face direct risks from Ponzi schemes, fraudulent platforms, and misuse of crypto ATMs, which can drain savings in seconds. The ecosystem has evolved from a technological experiment into a socially visible high-stakes arena, where governance, transparency, and ethical considerations directly affect market behavior and investor trust. Investor sentiment is shifting dramatically. Market data indicates that following the Trump-linked UAE deal, institutional investors are reassessing exposure to politically sensitive crypto assets. Bitcoin, already highly volatile in early 2026, faces additional pressure from political and regulatory uncertainty. Analysts explain that when governance and market risks compound, volatility intensifies, sell-offs accelerate, and confidence diminishes. Political and financial transparency is now inseparable from market stability in cryptocurrency, particularly when high-profile actors are involved. The Trump family's crypto ventures, including American Bitcoin, which holds nearly 5,900 BTC, illustrate the governance challenges facing the digital asset ecosystem. Even substantial holdings do not insulate companies from reputational risk, ethical scrutiny, or market shocks. Analysts note that political exposure and public perception can outweigh technical fundamentals, affecting prices, valuations, and investor confidence. Institutional backing alone is no longer a reliable shield against volatility or public criticism. High-profile criticism continues to shape public perception, Ken Griffin's comments, combined with calls for investigations from figures like Senator Elizabeth Warren, amplify uncertainty and contribute to market volatility. Media coverage and social platforms magnify the consequences of each corporate move, statement, or deal. In a market where confidence is a critical asset, reputational risks can influence liquidity, valuations, and strategic decision-making as much as technical market fundamentals. Ethical debate remains central to this narrative. Political influence, personal wealth, and crypto activity intersect in ways that challenge current governance frameworks. Critics argue that even legally executed transactions can erode public trust if perceived as conflicts of interest, particularly when foreign investors are involved. Supporters contend that blockchain transparency and robust compliance can mitigate risks, but the Trump-linked UAE deal and the Binance pardon are prime examples of how politics and cryptocurrency increasingly collide in high-stakes ways. Looking forward, analysts anticipate more rigorous regulatory oversight, heightened ethical guidelines, and increased caution among investors. Market participants are advised to monitor political developments alongside financial indicators, recognizing that governance and regulatory risk now carry as much weight as traditional market fundamentals. Digital asset firms may adopt more conservative strategies, emphasizing compliance, transparency, and risk management to protect themselves from reputational and financial damage. The combination of political scrutiny, legal investigation, and global attention is establishing a new standard for accountability in cryptocurrency markets. Public perception is now a critical market factor. The reactions of billionaires like Ken Griffin, combined with congressional attention and media amplification, create feedback loops that influence investor behavior. Social media, financial news outlets, and influencer commentary magnify the impact of each deal or political decision, affecting not only market prices, but also public trust. Confidence itself has become a market asset, susceptible to both financial and reputational shocks. Ethical and governance questions are intertwined with financial performance. Decisions made by politically exposed crypto ventures, even when legal, can influence public perception, investor trust, and market stability. Critics argue that transparency and accountability are essential, while supporters note that blockchain provides built-in visibility. Nevertheless, the Trump-linked UAE deal and the Binance pardon underscore the complex interactions between politics, ethics, and finance in today's digital asset ecosystem. The implications extend far beyond individual firms. Regulatory enforcement, political scrutiny, and global investor attention illustrate the challenges facing the cryptocurrency sector. Analysts suggest that the Trump-linked transactions provide a case study in governance risk, emphasizing the importance of compliance frameworks, independent audits, and public accountability. Market stability now depends as much on perception and governance as on technical market fundamentals. For investors and observers, the situation underscores the need to consider political and regulatory risk alongside traditional market metrics. Cryptocurrency is no longer just about price, charts, or technology. It is about governance, ethics, transparency, and the global interplay of finance and politics. The convergence of high-profile deals, pardons, and international investment creates a landscape where trust, reputation, and regulatory compliance are as crucial as liquidity or volatility management. In conclusion, the Trump-linked crypto saga illustrates how politics, finance, and digital assets are deeply intertwined. Investors, regulators, and observers must assess governance, public trust, and political influence alongside technical fundamentals. High-profile commentary from billionaires, lawmakers, and regulatory authorities demonstrates that transparency and accountability are essential for survival in the market. As 2026 unfolds, every transaction, pardon, and corporate move could reverberate globally, affecting market behavior, regulatory frameworks, and the long-term trajectory of digital finance. Cryptocurrency is proving to be a domain where ethical responsibility, political scrutiny, and investor protection are inseparable from success, shaping a complex landscape that demands vigilance, strategy, and awareness from all participants.